What if the money in your wallet was never meant to make you free? What if inflation wasn't a mistake? What if debt wasn't the failure, but the feature? And what if the single most powerful financial decision in American history wasn't a war, wasn't a president, wasn't even a crash, but a quiet decision made in 1913 that permanently changed how money is born? Because here's the problem: no one can seem to explain to you anymore. You work harder, you earn more, but somehow everything costs more. Homes feel unreachable. Healthcare feels hostile. Savings feel completely useless. And they tell you, this is just how the economy works. But what if that's not the whole story? What if the economy is doing exactly what it was built to do? What if American money was redesigned not for stability but for dependence? Because once your money is born as debt, you are never truly free from debt. Before we go any further, I'm curious, where are you watching from? Comment your city or your country below. And if you're interested in the financial truth that never seems to make the textbooks, the headlines, or the political debates, make sure you subscribe. Because today, we are going to expose the system behind the system. You see, before 1913, America did not have the money system you live under today. It was completely different. Back then, dollars came from gold and silver. Banks could actually fail if they made bad decisions. Credit expansion had natural limits. And creating money took real work. The government had to earn or collect money through taxes before it could spend it. Sounds a little primitive, right? Or maybe, does it sound strangely responsible? Because today, we spend first and then we figure out how to pay for it later. And that is the fundamental shift. 1913 changed everything. That year, America created something entirely new, a centralized authority over all money and credit. This wasn't just a bank, it was a permanent engine for issuing money as debt. From that moment forward, every single new dollar entered the economy by being borrowed, not earned, not mined from the ground, not taxed from the people, borrowed into existence. Does that sound familiar? That is the inflation you feel every single day. It's not just rising prices, it's the constant growth of the currency supply that devalues what's in your pocket. Then, war broke out. And this is where the new system became permanent. Before central banking, wars cost a nation its gold reserves. They were expensive and had a finite limit. But after central banking, wars cost future generations. World War I proved something incredibly dangerous. You can fight unlimited wars if you were willing to borrow endlessly from the future. World War II proved it all over again. The national debt soared. The currency supply expanded massively. And taxation increased to levels never seen before. Sound familiar? Every single modern war is financed not by a nation's savings, but by borrowing from the unborn. You didn't vote on that debt. You never consented to it, but you inherited it, and so will your children. Then came the final, critical shift. Gold was removed from the system completely. The dollar became pure belief, just confidence, trust. There was no backing, no anchor. From that moment on, money had no ceiling. Debt had no restraint, and the power of those who control it had no limit. Does that sound familiar? It's from that moment that housing prices detached from wages, college tuition detached from reality, and the certainty of retirement detached from a lifetime of hard work. You see, you didn't break the system, you were born inside of it. Now, here's the twist they never ever tell you in school. Banks don't lend money that already exists. They create it. When you take out a loan, whether it's for a car or a house, new money appears in the system. That is not a metaphor, that's just how the accounting works. Every loan creates currency. And when that loan is paid back with interest, that money, the principal, disappears, which means no loans equals no money. No debt equals no economy. So now you have to ask yourself the really dangerous question. If our entire economy requires debt to function, what happens when that debt stops growing? The system collapses. And now you understand the core secret. The economy isn't chasing prosperity for you, it's chasing borrowing. It needs more people to go into more debt, forever. And someone, somewhere, designed it that way. In part 2 of this series, I'm going to show you who was behind this. And more importantly, why the name might just shock you. Make sure you're subscribed with notifications on so you don't miss it. Thanks for watching. Never wondered how money is really made? It's not printed in some giant factory around the clock. When a bank gives out a loan, it doesn't move money from someone else's account. It simply types new numbers into a computer. A ledger entry, poof, new money is created out of thin air. This is how our entire global economy grows, through debt. But here's the trap. The hidden mechanism most people never see. When a bank creates that new money, let's say $100,000 for a mortgage, it only creates the principal amount. Think about that for a second. If the principal is created but the interest isn't, where does the money to pay back the interest come from? The only way is for someone else to go into even more debt. This creates a constant, mathematical necessity for the overall debt level to keep rising. If we ever stop borrowing more, the whole system collapses because there simply isn't enough money in circulation to pay back all the loans plus the interest. This isn't the capitalism we read about in textbooks. This is a system of perpetual obligation. It's a treadmill that can never stop, and the consequences are staggering. Since the creation of the Federal Reserve in 1913, the US dollar has lost over 95% of its purchasing power. Let that sink in. A dollar from 1913 would be worth less than 5 cents today. This isn't just some accidental mismanagement. It's not a bug. It's a feature. It is the fundamental architecture of the system. What do they all have in common? They expand the money supply. They create more debt. And every time new money is created, the value of the money already in your pocket, in your savings account, it shrinks. It flows from the central bank to the commercial banks, then to large corporations in the financial markets. But by the time it reaches you, its purchasing power has already been diluted. The value has been skimmed off the top. Their income and savings by less and less each year. It's a silent transfer of wealth from the working class to the ascending class. Let's look at the numbers today. America's national debt has now surged past $34 trillion. And the interest payments alone on that debt are over $1 trillion per year. That's $1 trillion that doesn't build roads, or fund schools, or advance science. Pension funds, which are invested in government and corporate bonds, would fail. Governments would default on their obligations. Stock markets would crash harder than we've ever seen. So what's the only option left for them? To inflate faster, to kick the can down the road, making the problem bigger and bigger, hoping they're not the ones in charge when the music finally stops. But it's an illusion, a mirage created by a torrent of devalued currency, and this time, the system is different. It's global, it's instantaneous, it's run by algorithms trading in microseconds. The next failure won't be a slow motion crash like in the past, it will be swift and it will be violent. Not with weapons, but with a sudden, catastrophic evaporation of liquidity. The solution will be more control, more centralization, less freedom. You need to share this information, not because it's a conspiracy theory, but because silence is the oxygen that this system breathes.